Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, September the 10th. The year's 2020. Let's talk trading. Secrets of trading for a living with Walmal. But before we get into that, the disclaimer is up there for all to see. And I've got Walmal on the line. Walmal, what's the secret of trading for a living?
I think I said it in yesterday's video. Be consistent. Be consistent, and once you find something that works, just keep on doing it. Don't change it. Just keep on doing it and doing it and doing it. I think that's the you want to boil it down to a byline. That's it. You just gotta, once you figure out what it is that makes you profitable, don't change it. Don't mess with it. Just keep on doing it over and over and over again.
What was the first thing, or the first time we talked? What did I tell you?
You told me if you're profitable, don't change a thing, and you're exactly right. You may go and look at things and try to fine tune it or whatever, but don't change it. Don't change the core of what you do. I took that advice, and I welcomed that advice, and I took that advice, and I'm so glad that I did, because the only thing I've done since that time when you told me that was maybe go and refine it on some of my entries, make it a little bit clearer that, hey, this is an entry I probably don't want to take, or an entry that I do want to take, and maybe refine some of my exits a little bit. But the overall plan has not changed. And my overall plan, like on the Walmal method, just taking the breaks of of those sweet spot lines, of just taking those 10-line breaks, but at the same time, yeah, you can refine it. One of the things I've added in the last month or two is that what I do is I now go and take also the H1 breaks. So if it breaks, below the low of the previous hour, or above the previous hour's high, and if that's closer to take than a 10 line on a sweet spot line, I'll take that instead. That's a refinement. That's not changing the plan. That's just going and saying, hey, there's an opportunity here, and it seems that this is working out. And when you look at it statistically, it does fall into the plan. I didn't change the plan. All I did was refine where my entry was going to be based on what my plan is.
So, but you have changed a few things since we met, though.
Oh yeah. I've changed some. Absolutely, I've changed a couple of things, and the thing is, what I've changed though is still within the plan, because my number one rule obviously is preserve capital, so that drives everything. That has not changed. I've added a way of entry. That has changed, but it's not, but it doesn't violate, anything. And the next thing that I've changed is that, actually I haven't changed, but I've paid attention to, and that is that my second rule, that most important rule, is trade what you see. And so one of the things I've seen over the last month or two is that the way the pound moves. In fact, we were joking about this earlier, and the idea that lately the pound will go and do these things where, like you look at today's market, and we've moved, going back 3 hours ago, 73 pips, and then 72 pips, and then 51 pips. In this hour, where we've moved 46 pips. Yeah, that looks great on paper, that you've moved all those pips, all those hours, and all I'm trying to do is get 10. But the problem is that one of the things that the pound has started to do, which wasn't doing last fall, is that it will jump up 3, 5 pips and then go back the other way 7, 8, 10, 15 pips, and then come back again. And so one of the things I've had to change is that, my method before was, get in and stick it out, stick it all the way out until I get my 10 pips. Well, now I'm a little bit more cautious. It's type of thing, because I see that bouncing back and forth like that. Sometimes now I get to on positive 3 pips. A lot of times I'll just go and say, don't like the way this is looking. I've seen this before. Get out, take my 3 pips. And you go and say, well, that's a long way from 10, but it's a third of the way there. And it's better to go and pick those 3 pips up than it is to go and find yourself in a loss situation. And that's one of the reasons why I made that change. Now, what did I change? Did I violate the plan? No, because I kept to rule number one. Rule number one, preserve capital. I kept to rule number two, and that is trade what I see. And what I've been seeing is that moving back and forth like that.
Okay, and then I guess I kind of introduced you to the range and then the smart range.
Yes, yeah, and that was another thing, because that was very, very important. What that did was that helped me with refining my trades. Because, for instance, right now, we're sitting here at 10:45 Eastern time, okay, and we've ranged 47 pips, 48 pips, and that's 94th percentile. Even if I see a trade going short right now, because we're at the edge of that, I'm not taking that. That would be a crazy trade to get into. Whereas, a year or so ago, if I was at a line right here, like we're coming in right now on the double zero line here, you know what? I probably would take this trade. No, I won't do that anymore. We're sitting at 94% of the range for that hour. Let's just go wait for the next hour. Is it a possibility I'm going to miss a trade? Absolutely. I absolutely could go and miss a trade. In fact, I did. If you look at it right now, we're down to 97 already. So could have picked up 3 pips there. But that's not my plan. That's not what I'm going to do. And the reason why is because I'm now taking into account that smart range, and that smart range helps me have an idea of how far we've moved. And it just gives me a very clear picture. It's time to start being cautious. Now, sometimes it keeps you out of some good trades. Okay. That's okay. And so if, I've said this a bunch of times in the past, there's always going to be a bus pulling into the bus station, or there's always a train coming into a train station. You just get on to the next train, take the next opportunity.
Well, one of those things, though, is, and I was teasing you. In fact, I had asked you earlier if you were done for the day, and you said yes. So I said, okay, I'm going to hang up the phone on you so I don't tempt you.
Yep. And what had happened was, just so everybody knows, I was up a bunch of pips. And then what happened was I took 2 losses in a row. I took a 7-pip loss and a 3-pip loss, and I said, I'm done, And so and then you teased me about, are you really done type of thing. And it's like, yeah, I'm done. And I walked away from the computer, and I came back to my computer maybe a half hour later, and I saw a perfect setup. And it's like, yeah, I'm going to take it. I'm up enough pips today. I can take another loss if I have to. It's not going to affect my capital in any way. But at the same time, this is a really good opportunity. So I went and took that trade, and I'm glad I did. Picked up some more pips, and in fact, made up the 10 pip, the 2 trades that I lost 10 pips on. I made that up, and so and a little bit more. So that was great, and that was wonderful.
Yeah, so now, but the boys and girls and non-binary traders are watching, and we see that price hit that 129.00, and now it's at 128.91. So there were pips to be made there, but because of your plan and saying, well, hey, if you look at the last 4 hours now, these are like the most pips, at least on my chart, out of the last 160 H1 bars. These are like in the top 10% of range.
Yeah.
So it's like something, it's like, are you going to push your luck?
Yeah, exactly. At some point in time, it's going to go and it's going to, collapse on you. There's only a certain amount of pips it's going to move in an hour. And statistics, and that's what we trade here. We don't trade, we don't go and trade, market structure and things like that. We're trading statistics. We're trying to go and get an edge. And the edge is telling me it's moved, for this hour, it's moved 96% of what it's done. So that means that out of 100 trades, 96 of them were less than where I'm at. That means there's only 4 of them out of 100 trades that have been more than this. Does that tell me I should take this trade here, or does that tell me I ought to go and stand aside? If this number was sitting there, at 55, I'd be cautious, but I probably would take the trade. Except for one thing, we're at the end of the hour. And that's also the part part of being consistent to your trading plan. There was somebody out on Facebook page yesterday. I saw that comment and it had said, would you go and take a trade, at 30 minutes or 40 minutes into the hour? And I didn't even have to answer it. Somebody else went and jumped in and answered it for him. So, no, it's the idea is that you want to go and maximize how much it's going to move during that hour, and that's exactly right. Because I know what this hour has a high probability of doing, and because I know what this hour has a high probability of doing, the likelihood of it going against me or in my direction is a 50-50 shot. I have no idea. All I do know is that towards the end of the hour, I just don't do it because towards the end of the hour, I've ranged out basically what I'm going to range out. So why would I jump in at that point in time? Why not wait to the next hour when I've got another opportunity?
Exactly. And one of the things, remember a couple hours ago when the candle was down around between 20 and 30, and then it bounced up, and then the hour opened. And remember I said something about, what's going to happen is it's going to cover that wick. It's going to come back.
Right.
And look what happened.
Exactly. Yeah, exactly. In fact, if you look on the daily chart, we've now come down and covered the entire wick of yesterday. And that was a huge wick yesterday, and that's what we were talking about. And it's like, and the thing is, again, we know from past experience that's what's happened. Does that mean that's what's going to happen this time? No, it doesn't. But what it does mean is that we have an edge, and that's all we're trying to do is trade an edge. You think about, why does the house always win in Las Vegas? Because they trade an edge. Do they win every single bet that's placed in Las Vegas? Absolutely not. But what do? They shade the odds in their favor by 1 or 2%. Well, you can become awfully wealthy on 1 or 2%.
Yeah, and we have a little. I think we have statistically we have a little bit better than 1 or 2%.
Yeah, and we really do, and it's a really good thing that we do, because the thing is that because we have more than that, we can go and make mistakes. I mean, you make mistakes, I make mistakes all the time. We're human. We're going to make mistakes, and because we have much better than even the 1 or 2%, that those mistakes are covered by those statistics.
Yeah, in fact, you gave me a good idea for a video. We should do secrets of avoiding trading mistakes, something like that.
Exactly. It was, and part of it is, it gets down to that first screen you show all the time, those idea of all those brain management things, because, most of our mistakes are caused by our brain management. We're afraid. We're afraid of something. We're afraid of missing out. We're afraid of, we're afraid of getting out too early. We're regretting things that could have happened, woulda, coulda, shoulda. So most of those mistakes are caused by that. And of course, there are some mistakes I made because of mechanical reasons as well, but they're in the minority. The big mistakes that are made, generally speaking, are psychology. That's what's causing, those mistakes. We have to get a good grip of that.
Yeah, and that's probably the toughest. The toughest thing is that brain management.
Oh yeah,
that self-control.
I know we talked about this a couple months ago. We talked about it in a couple of videos, but it's so true. This whole idea of just knowing thyself. You need to know who you are, know your weaknesses, know your strengths, and and when you go and know those strengths and you know the weaknesses, you can go and put a trading plan to go and take care of that for you. And for instance, you can go and make some minor adjustments, like I had to go and do, which is taking the 3 or 5, and just cut it down a little bit because I see what the market's doing, and you put those things in place. Now you build your confidence up. Now you're willing to go and take the trades you need to go and take, and sure, you may get some drawdown. But the thing is, if you're consistent with all of that, and you're avoiding those things, and at the same time you're hopping on the things that you're good at. There are certain things that I'm very good at, and there are certain things I'm not so good at.
And you know what? The one thing that we're not good at is realizing how fast the fastest 15 minutes in trading goes. So, fellow traders, that's the secret. Okay? Remember it, because the main thing is it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, welcome aboard. Click subscribe. This is the Rumpled One, over and out.